Welcome back. Hope you're having a good morning. Well, we have listed down all the top stocks with the fundamental news that's come in overnight. We have Dipan Mehta, Director at Elixir Equities, who joins us on the show. Hi, Dipan. Good morning. Good to see you win. Trump's in focus again. He's going after the auto companies now. He's saying these taxes are for real. We're going to put in tariffs both on imports on autos as well as on auto components. Not great news for a couple of stocks. How do you see things panning out, both for the top two that we're looking at, Tata Motors as well as Sambandana Motherson?
Yeah, Nigel, good morning and thank you for having me on your show. See, I'm not so much concerned about Motherson Sumi, I forget the new name, because a lot of the manufacturing plants also are there in US and that has been their strategy, but it could have a sentimental effect on them. And of course, Tata Motors, because of JLR, that certainly is a market where they may be slightly at an uncompetitive position. But largely, it has got discounted, I think, Tata Motors valuation as well as the stock price movement of Motherson also. So from that point of view, I don't think it has a broader impact on the market per se.
But Dipan, so I don't know, I mean, would you, first of all, two-part question, would you expect any further dips on these stocks, whether it's Uno Minda, Sona BLW, Bharat Forge, but anyone who has anything to do with the US market? And if yes, then would you be buying the dip on any of these names, including Tata Motors?
This will be on the whole, no, our view on automobiles is a bit neutral because domestic sales also are kind of flattening out. So from that point of view, I think investors should get cautious. And now this is an additional uncertainty relating to a lot of auto ancillaries which may be exporting to US. And mind you, I don't think there are too many exporters to US from India. A lot of the companies you named are very strong exporting to Europe and other markets. So from that point of view, I don't think this particular event may have such a negative effect on the earnings of these companies. But on the whole, the Indian domestic market also is kind of slowing down and stagnating, as we may see from the March quarter, the March month's volume figures when they are out in April. So I would say a little bit cautious on the entire sector as a whole and look for opportunities elsewhere.
Dipan, good morning. Your thoughts on the market itself? I mean, still at the margin, even though market Bank Nifty rallied about 4,000 points from the lows, the Nifty was up almost 1,900 points from the lows. I mean, there is still skepticism whether it'll be able to sustain the gains and whether this is still a constructive, broadly constructive kind of environment. Just wanted your thoughts, Dipan.
Prashant, one sentence or one proverb that comes to mind is bull markets climb the walls of worries. And there are always worries going to be around, but yet I think the worst seems to be over. And if the March earnings season and market and management commentary is positive, I think we'll have a situation where we'll have higher tops and higher bottoms. And then every correction is a good opportunity to buy into stocks. By and large, I think liquidity is coming back into the market. After many, many months, we are seeing on several days the FI positions are positive. Large cap stocks are getting interest amongst investors. We saw block deals taking place in Kotak, HDFC Bank as well. So gradually, I think certainly the picture has changed from what we saw in the months from September to February. And I'm pretty optimistic that markets can build on these gains going forward. But as I said, there should be no fresh bad news. And the March earnings season should be generally positive.
Indeed, Dipan, one was waiting for that dip and suddenly the markets took off. People are now waiting for the second dip. If that doesn't come about, and if you have the foreign flows that are strong, then in fact we could see a good amount of a bounce even from these levels. But let's see how that goes. No more fresh negative news. That's a key trigger to track as well. Dipan, requesting you to stay with us. We want to focus
for what would probably be a bit of a cautious start. That's the large trade in Max, which our team was alerting you on earlier. And we'll, of course, get to know the buyer and seller's identity only later in the day. But the sense was that this could be a promoter selling a little bit of stake today. That's Max Financial in the news. Dipan is still with us. Dipan, okay, since I was talking about Max Financial, let's talk about the financials here, particularly some of the insurance names, which have really come back in the limelight. Anything that you're picking?
This will be, I think these are great long-term stocks and they provide stability in the portfolio. But in times like this, when the overall market is reviving, I think it's better to go for high growth stocks and some of the beaten down stars of the previous bull phase. So I would just be a bit cautious. So I would remain equal weight on insurance. But one very good way to play the insurance would be through something like a PB FinTech, which is an insurance portal, and now some of the concerns surrounding their healthcare venture, they seem to have subsided. So it's a better way to play the insurance sector and gives a complete exposure to that particular industry. So that would be our preference.
Okay. Also, yesterday's big star, Dipan, Siemens. We were just discussing it with the analyst as well, with this demerger now finally in motion. What is your call on the stock? Would you buy it with, obviously, to get the benefit of the energy business? How would you approach it?
Yeah, so we always, whenever there's a split like this, we have seen that there's a 5-10% value unlocking which does take place, and the present consolidated is slightly cheaper than when they are trading separately. So yes, I think you could have a trading opportunity over there. But from a longer term perspective, I don't know, because the valuations are extremely rich, and the stock also, in terms of performance, has delivered very well over the last 4 or 5 years. So P multiples also have shot up. So from that point of view, you want to be a bit cautious. But if you're holding Siemens shares, just because the valuation has gone up, I wouldn't sell. But from a fresh investment, I think there are better choices within the capital goods space or even the engineering construction space.
All right, Dipan, very quickly, what about BSE? I was at the exchange, had a chat with Mr. Ramamurthy a few days ago, and now they surprised the street with a corporate action. They're going to consider a bonus. What's your view on the stock? It's come off drastically from the recent peak. Your view now?
Yeah, Nigel, I think it'll improve the sentiment, but I want to wait for a correction and buy at perhaps lower P multiples.
Okay, all right. And throwing a couple of more to you, Zomato and Jio Financial Services, both of them will be in focus because of that nifty rejig that will take place. Your view on both these two names? There could be some flows that will come in towards the end of trade.
I think Zomato is for long-term investors, and if you don't have exposure to that particular space of food delivery and quick commerce, then this correction is a good opportunity to get into Zomato, but you have to have a 3 to 5 year type of a view. Jio Finance, I would avoid. I think there are better plays in the NBFC financials than Jio Finance. A bit disappointed with the scale-up which has taken place over there.
Dipan, another space is the gas stocks, right? So IGL, MGL, relatively cheaper compared to historical averages. Take a look at Petronet, for example. Only come up 10-15% from the lows. Any thoughts?
Yeah, Prashant, you're right, but there's no growth over there. And, a lot of shifting has taken place towards EV, especially on public transportation side. So that can act as a dampener as far as long-term demand is concerned. And these are basically utility companies. And with the economy reviving, stock market reviving, you want to go for small mid-cap stocks with high growth potential rather than safe stocks or defensive stocks like the gas companies.
By the way, the pre-open is coming up on your screen. Of course, the GIFT Nifty was weirdly unchanged. But the pre-open down 200 in the Nifty. I don't know. I don't think that perhaps it'll settle down. It's just the first 1 minute of trade, and we'll give it some more time. And we'll look at stocks, etc. in a bit from now. Maybe 2-3 minutes later, we'll start looking at individual names. Dipan, any thoughts on a name like Indus Tower?
Yeah, Prashant, first, a disclosure, we and our clients are invested and generally positive on that entire space. But, with Starlink coming in and now most of the capex and rollout of 5G over and done with as far as Bharti is concerned, and also the positive fallout of Vodafone, kind of remaining solvent and, going from strength to strength. So that risk factor also has come off in IndusInd. But look, the stock price has also rallied significantly. So I would say that, existing investors like us, we're remaining invested, but from a fresh investment perspective, I would say there are better choices.
All right. What about Ashok Leyland? What's the view out there? Plenty of buzz yesterday. Are they going to do some inorganic growth? That was something that the street was working. Then they were wondering, is it something to do with IndusInd Bank? At least as of now, it was neither. They're closing that European part of their business, which was loss-making, which in turn will be a positive. However, that IndusInd group, since they're part of the same group, could be a bit of an overhang on the stock. How do you view the stock, Ashok Leyland?
No, Nigel, generally positive on Ashok Leyland. And, we are seeing them steadily increase market share. The new products have received good response, and they're giving tough competition to the market leaders. And certainly this particular development is positive for Ashok Leyland. Valuations are reasonable. And should the economy overall pick up, logistics and transportation pick up, it will benefit Ashok Leyland. As also the fact that if the RBI goes in for interest rate cuts, that may also provide a boost to Ashok Leyland. And then there could be some regulatory changes as far as scrapping is concerned. So very positive on Ashok Leyland from a risk return profile. And if there is any dampener because of these particular development, maybe a good opportunity for long-term investors.
I think that is weighing on the stock actually, that additional pledge, that the promoters are taking on the shares that they have. So for the time being, the street is taking, bigger focus on that rather than the closing down of the European subsidiary. And that is weighing on it. That was always the risk when IndusInd Bank itself had, fallen. We had highlighted that in various shows as well, that could be a risk. And it seems, as of now, Ashok Leyland is under pressure because of the promoter pledge on the shares that they have.
Yeah, absolutely. Sizable amount over there. And that's, that's something that the street is not liking at all. Now it's correcting a little bit. I mean, it's not 10%, 5-6%, now 1.5%. Let's see. Maybe it's not as severe a reaction as a 10%, but the fact is that, there is a promoter level overhang on the stock. Anyway, for the pre-open overall, now we've settled down to a cut of about 0.5%, which is about 100 odd points on the Nifty. Look at Tata Motors in the pre-open, straight away 4% on the lower side over here. In fact, you should check out some of the other stocks as well. Samvardhana is down about 3 odd percent. Let's pull up some of the other names as well. Maybe we can get a Sona BLW and Uno Minda, some of the component makers that also have exposure to the US. Most of these stocks are starting on the lower side because of the tariff issue. Aside of that, HDFC Bank, TCS, some of the other biggies, they're also exerting pressure on the downside. Wipro's won a large deal. Wipro's up about 1% or so. Dipan, before we let you go, within the large cap space, aside of financials, I mean, IT, I know you've been very circumspect and you don't like the fact that there's hardly any growth. What about, say, a stock like L&T, anything else, large caps, where you're willing to put fresh money to work?
Banks and L&T, I think.
Okay, I picked both the spots correct then, banks and L&T for you. And L&T's, yeah.
Those are the only two sectors or companies where there is still growth which is higher than the nominal GDP growth rate and valuations are reasonable. So I would go, if you want to create a portfolio, the core holdings have to be the large cap banks. Could be PSU bank like SBI and maybe an L&T and then even a Bharti Airtel. Otherwise, it's getting very, very difficult to find large cap stocks which have got sustainable growth momentum of at least double digit within that particular category. So I would say these 3-4 companies have a good risk return profile. And certainly, I think you can be overweight in them. As a disclosure, we and our clients are invested in all of these large cap stocks I just spoke about.
All right, Dipan, thanks very much. Good to get your perspective as always. And since